Just about 1.5 years ago, inflation reached the highest point at 9.1% in the recent decades. And the latest inflation data at 3.1%, it was an improvement from its previous at 3.4%. But on the day of announcement of this data, the major US indices all collapsed by more than 1%. Why was there such a nervousness on the improved inflation data, and what is its implication? Today we'll discuss the reason behind this drop and how will the coming inflation numbers will be affecting the stock market sentiment. My name is Con Hao. My work at this channel, as always, is to study behavior science in finance, discover correlations between different markets, and uncover potential opportunities. And before we get into this topic, please do take some time to read into the disclaimer. And let's look at what happened after the last crisis in 2008. And we literally saw across all the stock market, all the major indices, it went into what I call the very smooth exponential growth for the last 20 years. But it kind of stopped at the beginning of 2022, as we could see here. For the whole year of 2022, it went into the bear market. And for the whole year of 2023, it went into the bull market and extending into 2024. So what is the cause of an improved inflation data, like what we saw here, but a sell down across the US indices? Now, it all started from 2022 that you may want to ask why the market became volatile after 2022. It was because of inflation. And we can see that the inflation started to pick up since March 2021, or all the while for the many decades has stayed around about 2%. But since then, the inflation has started to climb to about 9.1%, and the rest are history. The market is never the same again. Though the inflation did come down from June 2022 from 9.1% to about 3%, that was June last year. But what happened here is that the market are losing some patience here. This is what I mean here. For about more than 1.5 years by now, the inflation number seems to have plateaued. What the central bank and what investors and traders hope to see is that inflation continue to descend down to about 2% to the good old days, like what most central bank say that they hope to see that inflation come down to 2%, but it is not happening here. That we could see for more than half a year, inflation stayed at about 3%, 3.4, and 3.1. And I quoted this from Jerome Powell because in every meeting, he almost said or are committed in saying the same thing again and again. And this is what he said. We are committed to achieve a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time, and to keep policy restrictive until we are confident that inflation is on the path to that objective 2%. But for half year, the central bankers, the investor, and traders are waiting for it to come down to 2%, but it never quite happened. And with the Middle East crisis, or the Red Sea crisis that we're seeing here, there's the disruption to the supply chain, and that bring back some memories of the COVID-19 or the pandemic lockdown. It was because of the lockdown, it caused a disruption in the supply chain, then the inflation pick up. So will that happen to this time round? So we are all very concerned. And though the last inflation number was an improvement, but certain data have picked up tremendously. And this is what I quoted from the Moody's Analytics Economist by Mark Sandy. And he said that while the overall downward trend is encouraging, he's referring to the CPI numbers, there were a few disappointments. Under the surface, as inflation rose from December to January in the categories such as shelter, food, and electricity. And these are essential to day-to-day living. And the market seems to be getting more nervous the last few months. And that's what I'm seeing here. And what we're seeing here is the micro Dow Jones, and this is a day chart. Now, I want to take a few moments to observe what I'm seeing here. Now, over the last 2 months, as I witnessed, especially over the last 1 month, whenever the market came down, and I could see that there was an increase in volume. And this volume surpasses all the average over the last few months. As the market come down, the volume increase. So it speaks to me in terms of behavior signs that market is getting very nervous each time. And if you're going to ask me this million-dollar question, where will the market peak? If for Jerome Powell and Warren Buffett to reply, I believe they will give you this reply. We do not know when or where the market will peak, but when it happens or when the high is being established, we will know and we should be able to tell. In short, they are telling us, please do not try to pick the high. Nobody can do that. Keep investing if you have a strong conviction or proposition and not being part of the herd. Stay tuned for my coming tutorial. Remember to subscribe to my channel. The market are always telling us on their next move. Join us in our weekly case study and discussion. Click on my profile icon to find out more. Feel free to leave any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.